there's a small notification. Um, there is some lecture evaluation form in your site, and so please fill and send it to IBSL, right? Okay, so we will continue now, right? Okay, so let me continue where we have stopped last time. And in fact, uh, we will start the tute number 9, tute T2 under customer protections, and we are trying to finish it off today, right? So anyhow, we are going to finish this today. So I'm going to finish most probably next couple of weeks. I mean, during the month of October, and I may finish my lecture series. So therefore, the next sessions about the HR, right? I have already sent you the HR. In order to start the HR, I may try to finish it today, these customer protection laws and practices. Okay, so we discussed why we regulated, why we have regulation. The first one we discussed in detail, the reason for that, for protect customers, right? Now, why we have the regulation? First one, to protect customers. Now, for that, we have discussed ombudsman, deposit insurance scheme, customer charter, financial mis-selling, then education, and then confidentiality, credit counseling center, and sometimes we may use to send SMSs to customers once you do any transaction, right? Or renewal notice or whatever. So these are some of the initiative taken by institutions and the regulator to protect customers, right? The second one, why we need regulation also. We need regulation also to protect the financial institution also, right? Because financial institution collapse, it may have a knock-on effect. Other financial institution may fail, right? Therefore, we need to protect the soundness financial institution, to maintain the soundness of financial institution. Now, let me see what action or what legal uh, activities or legal cover to protect this financial institution. Okay, first one, as we are well aware, is what you call the parat execution, right? I think some of you are aware about the parat execution, and that is the law. Usually we call as a parat execution, but the law covered and parat execution is the recovery of loan by bank, Special Provision Act 4 of 1999, and there are two amendments after that. I will explain to you all these two amendments. Now, first I try to explain what is this parat execution, right? Now, parat execution is a, you know, the Roman Dutch law, right? It's a Roman Dutch law, and it's a Roman Dutch law concept that grants a license bank. Now, earlier we have only for a limited banks, but now uh, this law this concept is grant a licensed bank the power to sell a mortgage property. Remember, bank the power to sell the mortgage property that had been secured to the bank as a collateral. Now, when you get a loan, I mean, with housing or whatever the loan, you may keep as a collateral as some property. So that house or whatever, you can sell it without going to the courts, right? Now, that's important. The exceptional feature of this parat execution is that the bank may proceed with the sale without involvement of a court of law. What you need to do? Only you need to have a board resolution, and then you have to publish the notice on the 3 pages, 3 government press newspapers as well as the gazetted, and then so you can sell it on auction, right? So why? If you're going for a normal court of law procedure, you know how many times or how long they take to execute. So it's a very difficult and a long process, because why banks are giving customers money? So therefore, so banks need to be protected by all these willful defaulters. Now the people who take credit, they may default it. So in order to prevent that, so law is there, bank can sell it under parent execution without going for a court of law. Of course, there's a procedure to be followed, right? But don't worry, if students who doing the law, they will ask the procedure, but you need to understand what is the advantage of this parent execution. Then, as I explained to you, there are two amendments to this act. Now, according to the Recovery of Loans by Special Provision Act was amended in 2011, Act number 1 of 2011, and there, of course, they have given the maximum loan value we can execute it more than 5 million. Earlier, any amount, right? I don't know why people have a law came for from Act number 1 2011, the total amount of loan, if this parent execution to be executed, the loan value may be 5 million. So sometimes the customers come knowing all these things, he want to take a 4 million loan, but he's suppose he need 5-6 million, but he take only 4.5 or something. So then you have to think, why is this fellow is taking 0.4 or 0.5, whereas he needs some 6 million. So that means he is aware he's not comes under parent execution. So granting a loan to that sort of a person, we have to be careful. You must give either more than 5 million or without going loan. So that is his intention to not to pay, right? You need to understand that. And also, again, there's another amendment took place for the same act in Act number 19 of the same year, 2011. And there's an issue of what is the 5 million, whether it is including interest rate or principal amount or capital amount. So therefore, the Act number 19, right, confirm that the loan, what is a loan value mean is the principal amount borrowed, not with the interest, right? Sometimes with the interest, it may go from you have taken 3 million loan, with the interest and interest is go up to 5 million more. Original, the principal value have taken as a this law to be executed. Okay, now you need to know, but the purpose, what is the purpose? Provide a greater level of security and flexibility by deferring willful defaulters. That is the main purpose. Otherwise, whatever, and also expediting the recovery of debt. Otherwise, if you go for a normal law, you know the procedure, right? In order to prevent that, this first executed, right? Then another important thing, there's an exam question asked by 2014 of 2015. What is the maximum amount of the parent execution can be executed? Answer was given 10 million, 5 million, less than 5 million, like that. Answer is 5 million, right? Now, prior to 2005, is a very famous case in the law, in your law, very famous case. Just I'll explain to you also. Prior to 2005, the banks could exercise parental right even if the mortgage property was owned by a party other than the borrower, right? Now, there are sometimes the guarantor also can keep some property mortgage behalf of his borrower, right? Right now, say you are going to take a loan. I am a borrower. Or somebody's property keep as a guarantor as a collateral, not necessary for borrowers. So then there's a very famous case called Ramachandran versus HNB, right? There's a very famous case. This is very famous in your, if you are studying law, definitely there are a lot of questions are coming on this, right? Ramachandran versus HNB, the famous case, and the Supreme Court held that the property could be seized and sold under the recovery of loans by banks. Special provision that the Act of which I explained to you, 444 of 1990, can be executed only the property mortgage by the the borrower, not any other people's property, right? So till such time, even for any other person's property is not belong to borrower, but they have executed this parati. But after 2005, after the famous case Ramachandran versus HNB, that was prohibited, right? Then there's another one, the same thing. The Supreme Court further interpreted this judgment in a subsequent judgment, HNB versus Jayawardena, all case with HNB, right? With Jayawardena, and where it was held that part execution can be exercised against a property mortgage by a director of a company, right? The loan has taken to the company, but the director is Mr. Jayawardena is a director of that company. So therefore, Mr. Jayawardena even though he has taken loan for a company, because he's some sort of a director, that law can be executed.
Okay. Excuse me, sir.
Yeah, go ahead.
Is it applicable if he is executive, independent or dependent, non-independent director?
That is not mentioned, but what now you have a point there. You're saying the director, you can file action for independent director or executive director or something. Yeah, in that case, yeah, because according to the corporate governance, I'm not sure on that, but I make a logic out of this, right? Now, according to the corporate governance, the independent director cannot be involving in any business affairs of the institution. That's you are aware, no? So independent director cannot be involving in any business activities, right? That is why we call him as independent. No, so therefore, in that case, he can't take on that ground. Just then, of course, we have to assume the Jayawardena is an executive director, right? But anyhow, that's a good question. But according to the definitions of independent director and executive director, yes, then of course Jayawardena may be an executive director, because independent director not in a position to involve in any business activities with organization, right? Clear on that ground? Yes.
Yes.
Good question, right? So that means you need to be aware about what is corporate governance and what is independent director, what is his role, how we differ from executive, how we differ from executive director. And if you want to be qualified for independent director, what are the qualifications he has to fulfill, right? Now he can't have the share, he can't have any person who is not he is not worked the particular organization or bank for at least for 2 years, right? So there are some qualification a person, a director to become an independent, right? Okay, that is something corporate governance, right? Okay, coming back to this parat execution, it is very important case again HNB, right? Now Sumudu Sanjeevani Nanakar versus HNB. Now this question, this is a very big issue at the moment. Now this case I'm just briefly touch, right? I don't want to tell all these things to you all, because you are going to learn all these things under law. But if you are briefly touches this, now that's another important case, Sumudu Jai Sanjeevani Nanakar versus HNB. Now this parat execution, now this is a decision given by Abru or three judges. Now what is the argument judges has given, the Supreme Court judges? Right, now they compare two loans, right? Now say one person grant loan for worth of 8 million. So HNB has given a loan to Mr. X, 8 million. Okay. And again HNB grant loan amount of 4.5 million to Y. Now say the HNB has got two loans, X 8 million, Y 4.5 million. Right? Now, X person, he is basically paying his dues. Right? He is paying his installment regularly and blah, 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 blah. Come. Now, his present, right, the installment, the loan balances comes to around 3.5 million. 3.5 million. But whereas the Y guy, he took the original loan, I mean the principal as 4.5, and he has not paid any cents. From the day one, he has not settled any installment. Now there's an argument, right? Now why X is not pay from 3.5 million? So X has some problem. He met an accident and blah 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 like that. So otherwise he's a good player. He make him to compel him to not to pay because of certain personal reason beyond. But otherwise he's a good customer. Now what we do as a HNB, or not only HNB, any all banks, we try to execute what? We try to execute parate for X. Why? Because his principal amount is how much? 8 million. But you cannot execute parate execution for a person. Why? Because he has taken only 4.5. Now you've understood the issue now. Now in that case, this law is very unfair. Now the guy who paid, we file action. I mean, we got to execute. But the person, he has not paid any cents. We cannot execute under parate. So that is the decision. So therefore, they said this is very unfair by Sumudu Sanjeevan in that case. So that case have a little issue now with this parate execution. Now these days you can't see any newspapers, no, sale properties and all, because if somebody is aware, they can quote the decision given by these judges, right? So that's the issue at the moment all banks are facing.
Excuse me, sir.
Yeah, okay, go ahead.
That means the minimum amount we can execute is 5 million.
5 million. Now this fellow has taken 4.5. Now we can't execute, no, but he has not paid any cents. But the guy who took 8 million, he has settled up to 3 million, then it's accumulated because of and all. But now we can execute to him, but not to 4.5 million. අර හොඳට ගෙවන එකකින් තමයි අපි උගින් තමයි ගන්නත් හදන්නේ. අර 7-5ක් ගෙවුවේ නැති එකට මොකුත් කරගන්න බෑ අපිට. So he has to go through a normal procedure. But you can execute only for parate without going to the court, only to the guy who paid us. So therefore it's an unreasonable. So therefore judgment given a favor of that the Sumudu. So that's now in the banking we have a little bit of issue about executing of parate, right? So you will ask from all these things from your law lecture, right? So I am not a lawyer, but you ask from the law lecturer about this issue, right? For but only thing is what I explained to you, there is a parate execution, or there is a law 4 of 1990 which safeguard the interest about the financial institution, right? Without going for legal procedure, after following certain procedure, they can execute under parate. So that is good for bank because banks has given customers money. Clear? Right. Okay, then we have another.
Excuse me, sir.
Yeah, sure. Go ahead.
Sir, this 5 million is it the loan granted amount should be 5 million or capital outstanding?
No, that is the principal amount. Now that is what the law say here. So that was clarified of Act number 19 of 2011. That's the issue. The amount of loan defined by the Act number 1 of 2011 was further clarified as a principal amount borrowed. not the balance. Okay, clear?
Okay, okay, sir.
Right. That is what, because there's an issue on this also, whether with interest or without interest. Then they clarify the principal amount is borrowed, right? Okay. Now, as a credit officer, so that is you have to smart. Then, as I told you earlier, if a customer comes to take only 4.5, then he has a capacity to buy. He need more than that, but still he stick to 4.5. So, what is his mental intention? He is not under parat execution. That ගෙවන්න නැති වෙන්න is a willful defaulter. එතකොට අපි මොකද කරන්න ඕනේ? We try to increase the loan amount more than 5 million or just avoid granting. Right? Intention එකකින් ඉන්නේ හරි උදන්නවා මේ law එක හොදට. Clear? So we have to be very careful. That is why we need to have an interviews. Right? Okay, that's a separate thing. Okay, now we have another. Yeah, go ahead.
Can we execute parate for moratorium loans if they default then?
No, we was asked to not to do no. Now moratorium won't mean we are just postponing for payment, no. Right? So therefore, central bank was given direction. If you are to not to do parat execution, to otherwise it's no point doing. So after that, yeah, then we have to do. Now remember, moratorium means not අපි ඔබට කියලා හුඟක් මිනිස්සු මේ රැවටෙනවා. මේ write off කරන moratorium කියන්නේ write off එකක් නෙවෙයි. You are delaying payments. Postponement of payments. හරිද? දැන් හුඟක් අය සමහරවිට මේක පටලෝගෙන ඉන්නවා moratorium ගියන් පස්සේ මේ සල්ලි ගෙවන්න ඕනේ නැහැ නෑ මේක ඔයාට අද ගෙවන්න ඕන නම් තව මාස 3-4කින් කල් දානවා. Right? ඒ facility එක දෙන්නේ. ඉතින් අපි කියලා තියෙනවා ඒ කාලේ එහෙම කරන්න එපා කියලා. Because why we gave moratorium for because to rescue that person is having a problem. ඒකටනේ අපි moratorium එක දුන්නේ. අපි මේකත් කළොත් එහෙම අර මොකද්ද ගණන් ගන්න විදිහට ගොඩ යනවා වගේ වැඩක් නෙවෙන්නේ, right? ඉතින් ඒක දෙනවා. ඊට පස්සෙත් ඉතින් ඒවත් නැත්නම් ඉතින් we have to execute. That's a different story. Okay? Understood that? Okay. Right. Then we have another law for 2002 of 1990 amended by debt recovery special provision. So it again also given a similar power without going to any courts, so they can execute certain recovery, right? So that's don't worry about much of this, right? Then apart from that, we have a series of action taken by the regulator as far as the particular financial bank and bank concerned. But we have a statutory reserve ratio requirement to maintain the healthy positions about the financial institution. Now, what is SRR now? So from 1st of September, so it was increased from 2 to 4%. Now is 4%. And then we have a single borrow exposure. So bank cannot give loans to one customer to avoid in a single borrow exposure. So there's a limitation, accommodation limitation. So only can give maximum of 30% of the capital, or maybe for 33% for a group, or maybe 50-50, 40, 55% for certain project, right? So thereby we are limiting granting a big amount to one single customer. Suppose if that customer collapse, so your entire portfolio is on NPA, right? So therefore, there's a limitation for single borrower exposure. Right. Next, we have a capital adequacy requirement. There's a capital adequacy requirement. Now, that also due to this corona, COVID-19, that was a little bit of postponed because central bank must increase the capital requirement for local bank, licensed commercial bank for 20 billion. And then to foreign banks above 100 billions to 10 billion. And less than 100 billion capital was for 5 billion, and all licensed specialized bank for 7.5 billion. Apart from that, capital adequacy ratio also increased from 12.5, 14.5. that was further reduced because of temporary reduce. Now there are, of course, I think you may learn what you may, I don't supposed to tell you everything, right? But I've just explained to you. We have all the bank in Sri Lanka divided into two types. What is the two types? One is we call, what is that? Domestically, systematically important bank, and all our banks. There are 4 banks in Sri Lanka considered as a domestically significantly important bank, systematically important bank. So those are People's Bank, Bank of Ceylon, Commercial and HNB. All other banks, though these people have to maintain 14.5, now of course 13.5, right? And all other banks are to maintain capital adequacy of 12.5, now is 12%, temporary reduced because of COVID situation, right? So those things I think you need to learn. When you come to DBF, we will tell you all, but then I think commercial bank also touch. Right. So then we have a liquidity requirements. All banks need to maintain certain liquidity requirement. Like what are the liquidity requirements? Banks need to maintain a statutory liquidity asset ratio of 20%, liquidity coverage ratio of 100%, as well as net stable funding ratio. These two are basically introduced by Basel III in order to protect the banks for liquidity issues. Basel III, 2 new areas was two new liquidity requirements introduced to the bank, and that is what you call the liquidity coverage ratio is 100%, but now it has reduced to 90%. But net stable funding ratio is a long term meeting your liquidity, and liquidity coverage ratio is a short term meeting. So those are additional cushion for your liquidity requirement apart for your liquidity ratio of 20%, right? Okay. So if you want to know about these things, SRR and all, there's an if you go to type SRR and type SRR in your web or in your internet, and there's an article written by me. So they are explained what is SRR, how to calculate the SRR, all things as a detailed article I published in, I can't remember, the last year June, I suppose. But if you get into your web internet and just say put SRR, my article is coming up, right? So it's give you the importance of statutory reserve ratio. Some countries are not having statutory ratios. Some countries are having 80%, 90%, right? All details, how to calculate the statutory reserve ratio, it is there, right? If you want, just refer. Okay. Then we have a directions of NPL, how to categorize the NPL and how to make a provision for NPL. And then central bank was given for integrated risk management direction, right? What are the risk management direction? Now these days people are talking about the enterprise risk management, right? Okay, so when you go to the DBF, you will learn all these things, right? Then we may have a corporate governance directions, right, given by the central bank. Now, why all financial institutions need to be adhered to this? And apart from that, on-site and off-site supervision. It is, if they are not there, please write down, right? On-site and off-site supervision done by central bank. Now, why all these things are there? To maintain to soundness of the financial institution, right? So now you know what are the actions taken by the regulator for to safeguard and maintain the soundness of financial institution in Sri Lanka. Now the third, why we need certain regulation. Now mind you, we need certain regulation to stability of the financial system, right? Now the payment system, right? The financial system, right? පද්ධතියම ආරක්ෂා කරන්නත් ඕනේ. මොකද පද්ධතියට මොකක් හරි වුණොත්, what happened? So one of the main objective of the central bank is to system stability, right? So therefore, what action? What are the laws in Sri Lanka to maintain the stability of the financial system, right? Now you see, especially payment systems, right? Especially for payment systems, we need to because it's linked to the national economy, right? If now say if you issue a check, suppose if you do the transaction through a credit card, so there are people to accept your payment from card form, right? So otherwise systems won't take place. So there's the rules and regulation are there to maintain financial stability of the financial system. Okay, right. The first institution in that case, we can tell you, is a crib, right? So that sometimes the examiner may ask from you the crib, right? What is crib? Credit bureau, right? Okay, now crib, it is started in Act number 18 of 1990 and then amended again of 8 of 1995 and recently also amended. That is what you call 42 of 2008. 42 of 2008. Now, actually, it was initiated by in 1990 as a soft opening by that during that time the our one of the president, right? 1 month president, Mr. D.B. Vijayatunga, during his time, right? And at the first chairman that time, Mr. Fernando, right? Okay. So now crib. Now what is the crib? Now crib is filling an information's gap between customer or borrower and the financial institution. That is the main thing about the crib, filling the information gap. Why? Borrowers knows everything about himself, but financial institution know only what borrowers say. Understood what I'm telling? Now customers knows everything about is good or bad and all, but bank need to believe what customers say. So there is always, as far as the loan is concerned, the information is asymmetric. Banks are not aware much about the customer. Then customers are well about himself, right? So there is a gap. So the crib came to fill this gap because otherwise the information is asymmetric, one-sided favor, right? Otherwise, financial institution, if don't know, he give loans to the bad customer, what happened? He can't recover. So therefore, crib is trying to fill in this gap, right? Okay, now otherwise, bank can get from another party. So very difficult. X-Bank ask from Y banks about customers Pereira's information. So banks won't give, but there are instances they are giving, but most of the time it is difficult. So therefore, there's a need requirement to have some independent body who will look after that part. Otherwise, what happens if you don't have a crib? So customers are moving from bank to bank. Hey, his bank is not known, or he thinks he's a good customer. Right? කතා කළාම customers දන්නවනේ සමහර customers ලා කතා කරන විදිය මොනවද හෙට ගෙවන්නම් වගේ කතා කරන්නේ. But he may move from one bank to one other bank. So as a result of that, sometimes the bank may collapse because deposit money has given to the customer as not, is not paying, whatever. So banks have a big problem. So ultimately, government has to come bail out this bank. Now, whose money government is paying? Poor people money or taxpayers money, right? It's unfair to them. So therefore, it is important to correct all this information, all borrowers, and then from the member institution and this information and provide it to the needy members. Okay, so that is the rationale behind the crib. So therefore, what's the main objective? If you examine, ask you, I'm just telling you something, right? But what is the main objective of crib is basically to create a conducive environment to people to obtain loan, and the second one, and it facilitate distribution to credit to all sectors of the economy. right? That's the main objective of the uh, crib. And also crib encourage responsibility of people. Now they become credit worthy. Otherwise, they know if you not settle, they will be blacklisted or red listed. So he can't get any loan from another party, right? So there are some functions of crib other than the objective. So the functions of collect and synthesize trade, credit of financial informations about the loan borrowers, as well as not only with from the borrowers, but also the guarantors, right? So keep collecting information. It is a duty of member institution to provide all this information. And customers also can ask some I reports to show his credit worthiness, right? So CRIP is two-way, protect one-way customers, good customers, as well as protect the financial institution, right? Some third party involving. So they may conducting some credit ratings, right? They will now analyze. Now these days, now remember recent, right? Now recently the CRIP add a special function, special support or special activity flagging the borrowers. Now they develop some credit scoring system with the information available with them. Right now, suppose a customer who taken a loan from any bank must have the records. Now, based on the information financial institutions, the member institution provided to CRIB, and they did some sort of a customer rating or what you call a credit score for the borrower. So accordingly, so please read that. I will just try to explain to you. Now they have identified, they have categorized all these customers or credit borrowers into 5 areas. One is based on the credit history. One factor is based on timely and payment behavior. Third one is based on irregularity of repayments, based on high probability or defaulting, or sometimes they can't evaluate because of insufficient information. Based on these criteria, the CRIB are now categorized and they are having a scoring system. For example, up to 620, then up to 580, 550, 500, 250. Likewise, you have a A1 to A3, B1 to B3, C1 to C3, D1 to D3, E1 to E3, like that. Then they have given you some color code, right? Now, if the color code gray, that means CRIP cannot give any evaluation about the customers because he doesn't have any much information. Now, very low risk mean A, then low risk B, average risk C, high risk D, very high risk E. Likewise, now that facility was initiated in 2020 by the CRIB. That is, you can collect all this information, right? So that's a new additions of CRIB apart from these functions. If you want to get more details, just get into the CRIB and you get all this information, right? Now that's a new area the CRIB has initiated. So therefore, functions of CRIB. Sometimes the examiner can ask you what is on objective and what is that functions of CRIB, right? So they provide credit scoring systems. So just go through, right? And also they conducting some training as well as conducting some research for a financial institution or bank. And it's an independent body. Is headed by usually the DG of the central bank, deputy governor. I think Mrs. Vivet now, I think, the head chairman, and there are some financial institution, Bank of Ceylon, also have the director representatives, right? So it's a good institution, right? Thereby what happened? Thereby they try to protect the financial system, right? So there won't be any defaulters in that sense, right? Okay. Now the issue comes. That's a challenging for credit rating bureau. Now we discuss about the open banking. No, can you remember we discussed about the open bank? Customers' information can get it by the third party with the permissions of the customer. So if those third party or the open banking or fintech companies can collect all this information, the role of a script may one day is going to vanish sometime. One day, right? Not immediately, because that part taken care by fintech company as a open banking system. So that's for food for thought. There's a challenge now, right? For future, not immediately, maybe because of initiations of open banking, right? Now, I am not going to ask you questions like this. If I'm going to ask question, and this is the question I'm going to ask. Okay, if you're interested, just write down, right? If I'm going to ask the questions, this is the way I will ask the question, right? Put it like this: what are the advantage of CRIP? What are the advantage of CRIP to the borrower, to the bank, and to the industry? Can you answer to that? I'm asking what are the benefits, or what are the advantage, or what are the benefits? So, okay, we say what are the benefits to the borrower? Have CRIP එකේ නිසා customer හම්බෙන benefit එක මොකක්ද? Right, දෙක. බැංකුවට හම්බෙන benefit එක මොකක්ද? industry එකට හම්බෙන benefit එක මොකක්ද? Right? Okay, just think. I remember me to tell next week, right? Right? මොනවද ලියන්නේ? නැත්නම් ඔයගොල්ලෝ කාම කියන එක ලියා ගන්නවා. Right? Try to answer. ඒ වගේ questions තමයි හොඳ. නැත්නම් කටපාඩම් කරලා what are the objective and all. So ඒ වලින්ම ලියන්න පුළුවන්. Right? Now, if I tell you now industry එකක්, example for industry, right? And it's provide conducive environment to people to obtain credit. Right? Okay, that's a facilitate a distribution of credit to all sectors. That's some of the things. It's good for industry. Right? Okay, so just think. So we will discuss that part next week. Remember me to tell you, right? Okay, then I think this is not in your handout. I anyhow forget, right? Please, and then I have to touch this one because I don't know what happened. That was erased. I not see. I can see it's not in your handout, right? Okay. So what is credit rating? So we have a credit rating institution. Now credit rating on credit worthiness of an entity, or customer, or instrument, or even for a country. So credit rating can be done, right, for a financial institution. Now, according to the central bank, every bank and financial institution need to get a rating from respected financial rating agency. Now, all this thing has to be communicated and show in your branches according to the customer charter, wherever you advertise. And also you can for a customer. Now, what CRIP is doing? Sort of a rating for customer. High risk, low risk, right? And for instrument, you can get the rating as well as a country. Now, country Sri Lanka, you see we have little downgrading, blah, blah. Right? For credit rating. Right? And it tells you the default rate, your credit worthiness. So there are some specialized rating agency to do that. Okay? Clear? Right. Now I'll ask you one question. Can anybody give me an answer? Please. Can anybody give me an answer for this? Right? Can anybody give me an answer for that? I think some may be aware. Can anybody give me an answer? What is the name? What is the name of the rating agency recently recognized and accepted by the Central Bank of Sri Lanka? What is the rating agency recently recognized and accepted? Now you can't go to any rating agency. That has to be approved by Central Bank, right? So what is the name of the rating agency recently recognized and accepted by the Central Bank of Sri Lanka? Who are the existing ones? Existing ones are Fitch Rating Lanka. Then you have a ICRA. Then you have a Standard and Poor and Moody's and all. Likewise, what is the recent one accepted by the Central Bank of Sri Lanka? That is Lanka Rating Agency Limited, LRA. On the possibility of asking a question, right? Okay, what is the name? Lanka Rating Agency Limited. I think August or September, I think. They very recently, they have taken the acceptance by the Central Bank. So now you can go to them and also you can get some rating. Okay, so with this small note, and we back again the topic, and I'm going to go a little faster, right? Okay, then, so what are the laws you can experience? Apart from that, to systems, there are payments, devices, fraud act, right? There are act to protect misuse of credit cards, and then we have Payment and Settlement System Act 28 of 2005, Card Payment and Mobile Payment Acts, the Electronic Transaction Act. So those are the act and there, of course, you have on-site and off-site supervision. No, cut that one. I have taken to protect the earlier one, right? Okay, cut that one. Now, on-site and off-site supervision. Right. Okay. So then, and also important things, issuing a check, right, without having funds to your account, right? Also, now they have identified under Section 25 of the Debt Recovery Special Provision Law is a criminal offense. Criminal කියන්නේ මොකක්ද? Criminal කියන්නේ මරීම හෝ මැරීමට තැත් කිරීම තරම් වරදක්. ඒ කියන්නේ දැන් අපි තුමු මම චෙක් එකක් ඉෂුව කරනවා සල්ලි නැතුව. ඇයි ඒ වගේ ඒක වළක්වන්න? එතකොට තමයි මේ චෙක් එක වැලිඩිටියක් කියනවා. Right? Everybody try to accept this check as a mode of transaction. නැත්නම් ඉතින් ඔක්කොම චෙක් දුන්නොත් එහෙම සල්ලි නැතුව මේකේ තියෙන වැලියු එක නැති වෙනවා. ඒ නිසා මේ සිස්ටම් එක, payment system එක, එහෙම නැත්නම් මේ financial system එකට තව වැදගත් ගේම් තමයි there's a law called under 2 of 1990, the issue a check without of funds in your account is a criminal offense. Criminal offense kiwa 1 year of imprisonment, fine of 1,000 or 10% of the check value, right? So but they are going to improve. This one is better. We kale hatiyata make a loku ganak, but now it's not enough, right? To issue a check without a fund is a criminal offense. Hide danna puluwan. Daduwa. So make it little tough, right? To have a small functioning of system. Okay, right. Now we are moving to the last one. So what is the last one? We are going to talk about to reduce the criminal activity concerning money. So therefore, bank cannot be used as a laundry to dirty money. Now these days, people are talking about something, clearance money and all, right? Amnesty bill or something. Okay, forget about that. Now talk about, right? So you cannot make use of banks to clean the dirty money, right? So therefore, for that we must have a loans, have a rules. What are the main three rules we are having? Only three main law rules or laws you need to remember. One, Money Laundering Act number 5 of 2006, Financial Transaction Reporting Act number 6 of 2006, and Terrorist Finance Act number 25 of 2005. Right now, the examiner asks from you, name three law acts prevailing in the for people not to involving in illegal transactions or not to use banks for unethical or illegal businesses. What are that? Money Laundering, Financial Transaction Reporting Act, Terrorist Finance Act. So these three you need to know. You don't want to know all the things, but at least certain things. Now, what do you mean by a money laundering? Is basically money laundering mean you are using the bank illegal money to clean the money, right? Now, say for an example, it is a process of transforming the proceed of crime into ostensibly legitimate money, right? Dirty money, you're going to, once you put it to the bank, it's like a laundry. You give the clean money, right? So there are laws to prevent that. Actually, these laws, of course, came after this. We've just mentioned about 21 years of or 20 years of this place at 20 years, no? Al-Qaeda මතකද ගිහිලා අරගෙවි ඊට පස්සේ තමයි මේ නීති ගොඩක් එන්න පටන් ගන්නේ. What actions can be taken by bank to prevent these activities? That is why bank introduced KYC practices, beneficial ownership analysis, obtaining details of credit to the account, any other activity which is specified in the direction. That is why we have a KYC form. Salli kohenda genawe. So they will interview and ask. So customer need to give the declaration, right? That is why we have a KYC and CDD to prevent all these things. Clear, right? So then why we need to have the laws like this? Because it is really impacted the whole community, and it has the reputational risk and the commercial risk involving in money laundering. If you people think my banks use these things, so I mean it's not ethically good, and they involving in illicit funds to further illegal activities if you allow him to do these things, right? And maybe results of financial institution may have some penalty charges if they getting involving with those transactions, right? Okay, those are the reasons. Now you know what is CDD and KYC. To know your customer, banks are expected to have sufficient information about your identity, your contractability and sources of income, as well as what are your businesses. Now, customer due diligence basically talk about what type of business you are involving in. KYC is usually about your personal information, right? Therefore, the KYC and CDD both prevent use of financial institution for money laundering and financing other unlawful transactions, right? So if the question examiner, I can remember one time they asked, what is the objective of KYC? What is the objective of KYC? Then අර ඒකේම ලියන්න ඒකට කියන්න objectives. What is? To prevent the use of financial institution for money laundering and financing other unlawful transactions, right? So that's the main objective of KYC and CDT, right? And KYC obtaining compulsory under Financial Transaction Reporting Act, right? And so we need to have a screening the customer when you're dealing with banks, whether they are involving any some sort of a terrorist finance activity, right? So all these KYC and CDD will facilitate on that. And so for that, Sri Lanka, we have established what is called Financial Intelligence Unit. There's a separate unit established as an independent unit in the central bank, are looking after this FIU. That is what you call Financial Intelligence Units. Now, the record in financial information on unlawful activities. Now, all the banks need to send informations to FIU. If you feel it any illegal transaction, suspicious transaction, so what you need to do as a bank employee, you need to talk to your manager. Through the manager, usually you need to talk to your compliance officer, and through the compliance officer, you get the advice, and then compliance officer may be reporting to FIU, or maybe compliance officer will tell you, okay, file immediately, call telephone the police and arrest him, right? So remember, you need to go through there's a channel, usually through the manager and to your compliance division, if compliance officer, and from compliance officer, FIU, right? Okay, so there's a lot of guideline issued by Financial Intelligence Unit, talking about how to create awareness about unlawful transactions and all sort of things, right? Okay, so therefore FTRA 6 of 2006. So what do you mean by FTRA 6 of 2006? Mean Financial Transaction Reporting Act basically obliges appointing of compliance officer, right, who would be responsible to this comply with all these three acts: pre-warning, report transactions and electronic fund transfer above 1 million, all suspicious transaction. Now remember, there is no amount for suspicious transaction. 1 million is threshold, right? Usually you ask from where you get all these things. But apart from that, any amount you as a counter student, counter employee may suspicious, you can complain, right? Now it provides the setting of FIU, right? That so I can remember one time they asked the question, FIU is established under what act? So act is Financial Transaction Reporting Act 6 of 2006, right? Okay, so these are some of the very basic things you need to know about the Financial Transaction Reporting Act, as well as the laundering and preventing of banks in dealing with illegal transactions. Right, now I'll give you another question. Write down, will you, that question? Okay, name three unlawful activities. Name three unlawful activities listed in the AML, that is anti-money laundering, listed in these three acts. What are you identify as illegal activities, right? Say for an example, manufacturing or trafficking, important possessions of dangerous drugs, weapons, right? Offenses against children, right? Dealing with exchange control violations, right? All are illegal, right? Okay, all are illegal, right? Okay, next one. What are the three mandatory reports to be produced by banks with respect to money laundering? What are the three types of reports? Can anybody tell me? So you as a branch as well as the bank need to provide information to FIU. What are the three types of reports usually we provide? Come on, I think you bankers must know. One report is what? Cash transaction report, we call CTR. Electronic fund transfers, we call ETR, EFR, EFT. Then what next one? STR. What is STR? Suspicious transaction report. So according to the central bank, So every bank, every branch need to provide all this thing information to web base to the FIU. So examiner can ask for, yeah.
Can you repeat the three
Yeah.
answers?
Yeah, cash transaction report, we call CTR, cash transaction report, electronic fund transfers, we call EFTs, and suspicious transaction report. If you don't have, you say nil. You need to send, right? So these are the three reports under all these money laundering acts. All the banks need to send to FIU. From there, they monitors, right? That person is going to keep everything because they're getting the information about the ID and all. So that's a suspicious transaction. So if we monitor that fellow, right? Okay. So otherwise, we have blacklisted and grey listed one time, right? As a country can be used lot of money laundering. Now we have just escaped from that. We have given clearance only last year, right? We have a ban. So this money laundering and took world, you see, around 5 trillion per year. This type of illegal businesses taking place through the banking sector without getting exposed, maybe around estimated around 5 to 6 trillion rupees, trillion dollars. Imagine, right? Imagine such a big amount. That is why the world, financial international task force, the international body of financial transaction, FIU, right? FIU is the local body, right? And that is why they are very interesting on this. So therefore, remember, bank cannot use, but all unwanted things. That is why we take KYC, right? Now, sometimes the examiner asks you what are the information you need to collect for KYC. That is your address, your occupation, right, as well as your permanent address. If deviate from your national identity card, you need to prove blah blah blah, right? So we discuss all these things very early date, right? Okay, at the time of opening accounts. Okay, right. Now we are moving to the next hour. So I'm going to touch on a prudent risk management of financial institution and customer protection. That's the final side. So this area also you may learn under commercial banking as well, right? But one time they ask question. Therefore, I try to explain to you a little. So we have 1 hour, right? Okay. Before I move to the next one, right? Okay. Terurad Okama. How is it? Kalinga? Clear?
Yes, sir.
Right. Son? Okay. Manti, no? Manti. Right. Malmi? Okay. Malmi, no? Okay. How is the Malmi?
Yes, sir.
Right. Okay, thank you. Right, now we move into the
Excuse me,
next
sir.
part. Yeah, okay, go ahead.
Tax frauds එනවද මේ email වලට?
මොකද්ද?
Tax frauds කියන්නේ tax වහන්න කරන වැඩ.
So yeah. So that means you said under illegal activity. Right, that is why always now I want to tell you this part. Bank need to protect, no. Now bank can't go behind you. Whether now say take an example. Now since you have raised this question, I have to explain. Now take example. Senior citizen. How much you can deposit for 15% maximum?
1.5 million.
1.5 million. Good. Now I have money, right? Now at the moment is 6 or 6.5 now, no? Right now 15% is a huge amount, no? So I have 6 million, not money, right? So I'll go to the Bank of Ceylon. See, I'm a senior citizen. Open for 1.5. I go to the People's Bank, put 1.5. I may go to the other bank. Now I like that the same person open what? All 1.5, no? Clear? So how HNB or Bank of Ceylon or People's Bank will check on that? If you had the same branch, you can check it. But if you put other banks, can you check? Can you check? Banning. Right? That is why we send all the information to the central bank. The central bank, right? They're supposed to check. Right? Hari. How? That is why we get the declaration from customer. Right? We'll get the declaration from customer, and when you open a so we get the declaration. Mata meet amatarava vena kohiwakkat baba mehima dala naha. So we need to get the declaration. So we say banks are safe. Even right? Can you remember there's an when you open an FD and they say, are you income tax payer? Yes or no? Okay. So if you say no, if the transactions are taking place unnecessarily, unusually, that is of your duty to inform the compliance officer through the FIU, and they will come behind you. If it's a fraud tax, also they may call income tax department. Right? Clear? So there is some rules is there, but I don't know to what extent those things are happening. Right? There is a system. System, but you can consider. Now, what we usually call them as a unlawful transaction is a terrorist activity, and if you are using that money for not for sort of an income tax thing, maybe use this money for money laundering, for illegal activity, unlawful activity, right? So if you, in that case, if you say, okay, why not for tax? So that is for that, right? It is a bank's duty to inform. But bank also in the safeguard getting declaration from the customer. Right? Okay. පෙස්සවක් එහෙම ගැහුවම කවුරු හරි ඔන්න අරයා එනවා කවුද ඉන්නේ ඉන්ලන්ඩ් වීඩියෝ එනවා පෙස්සවක් එහෙම ළඟ එහෙම කවුරු ඉන්නවා පෙස්සවක් ගෙවුණා ඉන්ලන්ඩ් වීඩියෝකට ඔන්න they send letters to all the bank මෙන්න මෙයාගේ identity card මෙන්න මේවා මට ඔක්කොම විස්තර දෙන්න මේගොල්ලෝගේ තියෙන bank accounts ගැන. Then they will come behind you. Okay? Right. Now we look at it. So, any financial institution, so you are well aware that face lot of risk. So banks are exposed to risk, right? Commercial banking, you learn all these things, right? All the banks are exposed to financial institution, and financial customers as well are exposed to credit risk, liquidity risk, market risk, operational risk. These are very famous for risk, right? So these risks, as you well aware, are interdependent, right? Now, what do you call an interdependent mean? If you don't have if you have a problem with the credit risk, that automatically bank face the liquid risk, right? If customers not pay your loan, right, bank face a liquid risk. So that is why we call interdependent, right? So therefore, banks set up inside dedicated risk management division. So you may learn under corporate governance, we may have a separate integrated risk management board subcommittee to look after whether the bank may have adequate proper risk management system established, monitor, and identify and managing the risk, right? So therefore, in order to mitigate certain risks, so there are a lot of products available like credit swap, right, for credit risk, and then you may have a lot of market risk. We have a lot of derivatives, forward contract like that. Okay, so you can get the insurance policies to cover certain risks, not all risks. So one risk we call them as that operational risk. Now operational risk basically resulting due to lack of internal processes, problems because of the people, that mean the employees, or maybe some systems, or maybe external events like pandemic, or maybe floods, drought, or whatever, right? Operational risk can happen, right? Maybe flood. Now pandemic, COVID, also an operational risk, right? It is an external event. What operational risk therefore happening because of inadequate or failed internal process. If your organization you don't have a better dual control, I will explain to you a little later on. And about your employees, can, because of their business, their activities, their negligence, or maybe systems like IT, right, also have some problems, and also due to some external risk problem. So there may be an operational risk. Then you may have a market risk because of interest rate fluctuations, right? But that is why we are, if you have a market risk because the interest rate is fluctuation, then high and sometimes volatile. So what? That is why people are going for what rate? Floating rate, right? If your market risk because of the price fluctuation, people are going for risk. So then we have the credit risk. The credit risk means the default of a debt that may arise from a borrower. If a borrower is not settling the loans or delaying payment, also you may exposed to credit risk. And then I have not seen you have to write down some liquidity risk, right? Somewhere liquidity risk, right? Please write down liquidity risk. Liquid risk. What do you mean by the liquidity risk? Liquid risk is the risk of non-availability. Okay, guys. Right. So you can write the liquidity risk. Liquidity risk is the risk of non-availability of funds, non-availability of funds to meet ongoing financial obligation. To meet ongoing financial obligation is the risk of non-availability of funds to meet ongoing financial obligations, right? Okay, so apart from that, we may have an information risk, you may have inflation risk, you may have a confidentiality or reputation risk, you may have a fraud risk, event risks beyond the normal factors, security risks. There are different type of risks. But for banks now these days, people are talk about cyber security risk, right? Present days banks are operating cyber world, so therefore there may be a lot of hacking, distributed denials of services, malware, social engineering, phishing, a lot of, I think these you are going to learn in details with the commercial banking, right? So remember, these are the type of cyber security risk. So therefore you are exposed to different type of risk. So as I told you, so if there's any risk, there is an assessment, generally includes identify the risk, what is the impact of this risk to the organization, and what are steps you have taken to mitigate the risk. So any risk assessment, remember, follow these three: identify the risk, assess the impact of this risk to the organization, and what action you have taken to mitigate. So that is basically a job of who? Chief Risk Officer. That is why we have a separate risk division, right? So it's not necessary to do by the risk officer, but you can do identify the risk, which I'll explain to you earlier, assess the likelihood of significance of this risk to the organization, and what action you have taken to mitigate. So therefore, we need a lot of input to assess, to identify the risk. Right? For identify the risk, we need information. From where you can get the information? Right? You can get from finance people, you can get from operational people, you can get information from legal, you can get information from personal or compliance department, internal audit department. So there is a systems to be there in the bank to provide all this information, especially to identify the risk. Right? So therefore, risk management, that is why I called you earlier, it is an enterprise risk management. Don't it confine only to the risk management division. It is an enterprise. All are responsible. It has to be linked to your corporate strategy. Your enterprise risk management is linked to your corporate strategy. Right? Okay. So that's what you call enterprise risk management. Right? So it is not only a one division, it is all bodies division. I just briefly touch about that, right? Okay. Now, how does this good relationship with the customers promote risk management of financial institution? So that is what, okay. Write down this question. It is in your last page. It is in your last page. I'll just ask from you one question. Write down. I'll give you so many questions, right? I try to, if we time permit, I will try to explain. Write down this question. Possible question. Discuss the risk faced by customers. Discuss the, okay, since I have time, I try to, okay, just write. If I have time, I will explain to you at the latter part, right? In your handout, last question, last slide. Cut that slide or you modify a call as for the new version, right? ඔයාලා දැන් මේ ස්ලයිඩ් එකේ කෙරෝලි තියෙන ප්‍රශ්නයක් අහලා. ඒක හරියට ලියලා නැහැ මම හිතන්නේ ඒක. So there are some mistakes, right? So write down the questions like this. Discuss the risk faced by customers. Discuss the risk faced by customers in their transactions with bank or financial institution, and risk faced by banks and risk faced by banks or financial institution due to misbehavior of customers. ඔන්න ප්‍රශ්න දෙකම අහනවා. කස්ටමර්ස්ට බැංකුවේ ගනුදෙනු කිරීමේදී මුහුණ පාන්න වෙන අවදානම් මොනවද? ඒ වගේම ගනුදෙනුකරුගේ මිස්බිහේවියර් එක නිසා බැංකුවට මුහුණ පාන්න වෙන අවදානම් මොනවද? So possible question. Right? So what's the question? Discuss the risk faced by customers in their transaction with the bank and the risk faced by the bank because of the misbehavior of customers. Just leave that question, the last page. If time permit, I will answer, right? Otherwise, I will leave it for you to tomorrow, for next Sunday to answer. But if for time permit, I try to answer that. Okay. I want to cover today and start the HR next week, right? Okay. Now you have understood this part. Now you say, how does good relationship with customers promote risk management of financial institution? Now this question is asking, so now we discuss, we have issues too, right? We have a risk. Both customers as well as bank face risk. But the question is telling, how does good relationship with customers promote risk management of financial institution? How can you avoid happening any unwanted things if you have a better relationship? right? Now the good relationships, as I mentioning by here, good relationship between financial institution and customers create confidence and trust. Now relationship create trust and confidence that promote integrity each other. Nobody is going to find faults with other fellow. So therefore, this causes for much of the risk is the lack or loss of trust and integrity. Now, lot of risk basically happening because of if you don't have a trust. And mind you, the bank and the customer having a fiduciary relationship. විශ්වාසය මත ගොඩනැගූ බැඳීමක් තියෙයි. So if they respect each other, so there won't be any risk. Customer ගත්ත ණය ගෙවනවා නම් බැංකුව කස්ටමර්ට ඉල්ලන ඒවා අවශ්‍ය දේවල් කරනවා නම්, so there's no risk, no credit risk, no liquidity risk, no operational issues if they fulfill the obligations of both parties, right? So how can you create that? Having a better relationship. So we don't want to have a sophisticated risk management models if you really adhere to the principles of customer fundamentals. But there are some instances where it is beyond this relationship. But usually all this credit risk, right, and operational risk, because why? People not, employees are not doing, they have taken the money from the customers. Issue. If you are not maintain a proper IT, if you go to the withdraw the money, IT is not working. That's the trust and confidence, right? If bank is not provide you a better security system, right? All can be sorted out to some extent if you have a better relationship, right? Okay, so therefore relationship better than proper risk management system. Okay, now another important things. How am I going to identify now whether your bank is having a prudent risk management in financial institution? දැන් අපි කොහොමද දැනගන්නේ මේ බැංකුව මේ financial institution එක right හරියට prudent විදිහට risk manage කරනවාද කියලා? විතක්ෂණශීලී ලෙස අවධාන කළමනාකරණය කරනවාද කියලා කොහොමද අපි දැනගන්නේ? Now say your body. How do you know whether your body is functioning in the normal manner? For that you go and check. You check your blood sugar. Right, good. Then you check cholesterol level. Okay, good. So that means so far my body is okay. Likewise, customer need to know whether this bank are having a prudent risk management system established. So for that, so there are some indicators like cholesterol, sugar level, alpha, gamma, like that in your body, financial indicators. One thing is your NPL ratio. It tells you to what extent you manage your credit risk, right? So it tells you how efficient you are managing your credit risk. So then I explained to you about liquidity ratios. So I mentioned there are 3 liquidity ratios bank need to be maintained. Suppose if your liquidity ratio is about 20%, right, then statutory reserve ratio, and then net funding, stable funding ratio, liquidity coverage ratios are good, high amounts, that means you are maintaining your liquidity. That means customers can, you are under any obligations, right? And then you're going to look at it, the short asset term liability maturity mismatch. Whether you are having taken short-term loans and granting long-term loans, short-term deposits, granting long-term loans. So you can calculate, right? So then you have the risk because this maturity mismatch is high. That means, so you have the danger because customers come and ask the money, right? So that's an indicator. And of course, capital adequacy ratio. That is why we need to maintain certain percentage. What is capital adequacy mean? So you have enough capital to absorb any unforeseen activities. That is why we have cushion it. We have a buffers top of that. Capital conservation buffers, recycling conversation buffers, right? Then for domestically systematically important band, they have other buffers as well. How you call that buffers? High loss absorption power capacity, right? So the new another risk absorption amount, they put it for a significantly important band. That is why they increased to 14 like that. Okay, right. So these are the indicators, right? And also ROA. So that means your return on assets. So it's good. They're not fluctuating. Your risk is good, right? And you have to match with the industry standard, right? Okay, so the customer protection, therefore, you can support by having a good indicators, right? Okay, so therefore, so customers are aware, you are aware, right? Because you are managing the risk. So therefore, there won't be any issue with the customers. Okay, right. Next point. What is a financial fraud? What is a financial fraud? You can write down this one, right? What is financial fraud? Financial fraud is sometimes we call, generally means, you can say, generally means, financial fraud is generally means stealing of funds. Stealing of funds. Stealing of funds. STEALING. Stealing of funds by engaging in unauthorized actions or duties. තමාට අයිති නැති කාර්යයන් වලින් අයිතු ලෙස මුදල් සොරකම් කිරීම. නැත්නම් generally means stealing of funds by engaging in unauthorized actions or duties. You think that is the only financial fraud? සල්ලි හොරකම් කරන්න ඕනේද fraud? No. Right? Have you heard the things called creative accounting? Can anybody heard about the creative accounting? Son, have you heard about creative accounting?
No, sir.
Aji, what is that creative accounting?
No, sir, I haven't.
No, sorry. Creative accounting means now your bank is actually earning low profit, right? Say 10 million. But in your accounting statement, you show a 15 million example. That also a fraud. Oh, not only reducing showing, also increasing showing. දැන් ඇත්තටම ලාභය මිලියන 20යි. හැබැයි පෙන්වන්නේ 10යි. ඇත්තටම ලාභය 10යි. හැබැයි පෙන්වනවා 15ක්. දෙකම වැරදි. So therefore remember the financial fraud, not only stealing the money but also showing high financial performances, showing high financial performances through such action, also a financial fraud. Showing high performances. Example, you can say creative accounting. So you're going to learn all these things once you come to DBF, right? Creative accounting, because it's a fraud, right? එකත් වංචාවක්. සල්ලි හොරකම් කිරීමම නෙවෙයි, right? So what are the type of financial fraud? You can just say example, right? Example of financial fraud. What are the frauds? All pyramid schemes, Ponzi schemes, creative accounting, mis-selling. Then what else? Insider dealing, right? All are just right? All are financial fraud. Mis-selling, you know what is that, right? And insider dealing means you disclose some of the internal information to third party. Now, for example, say you are working for a private sector organization, right? You are aware your organization is going to issue a bonus shares next month. The decision taken by your organization. Your organization is in the share market listing. Now you are going to sell, you are going to issue a bonus share, 1-to-1 or maybe 3-to-1 or something. Now what you are going to do now? You are going to tell one of your friends and tell, here, buy my company shares, machan, because we are going to give you a bonus share. Anna, කීප දෙනෙක් ඒ ආයතනයේ shares ගොඩාක් ගන්නවා. So that also a fraud. Why? Because it is not open to public. If everybody is aware, they will buy, no problem. But that information is given to only the limited set of people. So that is what you call insider dealing. So insider dealing also fraud. Right? Okay. So if you're going to talk a little bit more, so in technically we identify a triangle of financial fraud. Triangle of financial fraud. Trikoni. Mulya vancha trikoni. Triangle of financial fraud. Right? Eka konaka inno. Right? So he give excuses. What? අරුත් ගැහුවා ඒ නිසා මාත් ගහනවා. ගියාඩුවත් ගැහුවා ඒ නිසා මමත් ගහනවා. ලොක්කත් ගහනවා මමත් ගහනවා. Reasoning out. Why he do frauds? හරි එක හේතුවක්. දෙවැනි හේතුව තමයි අනිත් කොන. That's a one con, one age. Other age is telling due to pressure. ඔය කතායේ වැන්නේ චිත්‍ර කතා චිත්‍රපටි මගේ පුතා අසනීප වෙලා බෙහෙත් ගන්න සල්ලි නැහැ මුදලාලි ගාවට ගියාම සල්ලි දුන්නේ නැහැ ඒ නිසා මම බැංකුවට ඇවිල්ලා මොකද වෙන්නේ හොරකම් කළා due to pressure නැත්තම් මම ළඟදි මැරි කළා වයිෆ් හිටන් ඉන්නවා මම බැංකුවේ ලොක්ෙක් කියලා එතකොට මගේ තත්ත්වය මේ කරන්න වයිෆ්ට අරව අරන් දෙන්න මේවා අරන් දෙන්න කඩ යවන්න රට යන්න පඩිය ඉවරයි. ඔන්න මං හොරකම් කරනවා. ලැජ්ජාවෙන් බේරෙන්න. තත්ත්වය ආරක්ෂා. තව හේතුවක්. Another reason, that's the other corner. බැංකුව ඇතුලේ internal control properly නැත්තම්. දැන් අපේ employees are very smart, mind you. we ඉන්නකම බලනවා කොහේ හරි ගහලා පුළුවන් සෙට් කරගන්න කියලා. If you find it out, if the bank is not having a proper internal control system, නීතිය නැත්තම් බැංකුව ඇතුළේ අභ්‍යන්තර පාලනය නැත්නම් අභ්‍යන්තර ක්‍රමවේද ශක්තිමත් නැත්තම් මං ගිවි සැරේ ආන්න ගහන. එතනින් try කරනවා ගන්න. Right now you know the fraud financial triangle because of pressure, because of reasoning out, other one due to poor internal control. Right? So therefore remember, bank must have a, in that case, bank must have a what? Bank must have a better internal controls. Right? We must have a, usually bank have a better internal controls. Right? Okay, write down. What is internal control? Right? Okay, just write down. Policies and procedures. Policies and procedures. Policies and procedures. Established and implemented. Policies and procedures. Established and implemented. Policies and procedures established and implemented to manage and control. Policies and procedures established and implemented to manage and control a particular risk. Particular risk or business activity. Particular risk or business activity, or both. Or both. To which the institution is exposed, EXPOSCD, exposed, or in which it is engaged, or in which it is engaged, is called internal control. So simply talk about, you must have a well-established policies and procedure established in the organization if to mitigate risk and any business activity. Now, example I can tell you. That is one of the reasons why we have a what? Dual control. That is why we have a two keys. ඒකද අපි ඔය දෙකම එහෙම කිව්වට එක්කෙනා ගාව තමයි තියෙන්නේ. But you must have a dual control. Right? Okay. So that is why you sign authority limits. Right? There's a procedure. දැන් මොකක් හරි වෙන්න නැත්තම් හොඳයි. මොකක් හරි ඉදලා කචල් එකක් ගියොත් තමයි ඔඩිට් ඇවිල්ලා බලන්නේ. Now if you open up a LC, when you open up a FD even, you sign, somebody officer sign, he check your monitor whether he has really actually deposited the money, right? Okay, so those are internal controls, right? Now why? What are the main objective of an internal control? There are three main objectives. Why we have internal control? Three objectives. One, performance objectives. One, performance objective. Why? Because we need to efficiently use our resources, efficiently use our assets, right? Otherwise it's wasting. So therefore, performances objective. Maximum efficiently and effective uses of resources. Right. That is why we have a internal control. Then information's objectives. information objective. To provide information. Now say, example. Now you are in the counter, cashier. ඔන්න shortage එකක් වුණා සල්ලි. So you need to inform. දැන් හුඟක් අය ඉතින් ඉවිසරේ පොඩි ගාලා අතින් දාලා නිකන් ඉන්නවා. නැත්තම් මොකද වෙන්නේ? Tele danger, a lot of problems though. So you are black. You know your name is not good. මොකද කරන්නේ? මේ shape එකේ අතින් දාලා බලන්න කැමරා තියෙනවා මතක තියාගන්න. දාලා තින් shape වෙනවා. But otherwise you need to report. There's a procedure to be followed. That is information objective. Other one, third objective is compliance objective. To fulfill the regulation also. The regulator also come and look at it. Are you having a proper internal control system? Right? So what are the three main objectives? Performance objective, information objective, compliance objective. Right? Okay. Okay, right. Then next point. What are the risks of weak internal controls? What are the risks if you don't have an internal control system? One, you can say business interruptions. So you sometimes you may come across with system breakdown, right? Something like that. System business interruptions. Second, fraud or theft. Because if you don't have internal control system, somebody can have a fraud or theft. Right. Or sometimes statutory sanctions. Regulator can fine you. Right? Lost the reputation. Excessive cost. Why? To do it again. So those are some of the risk of weak internal controls. Right? Clear? Okay. Right. Now look, this question appeared in March 2016. The internal controls are preliminarily expected to, what's the answer? What's the answer?
A.
A. Prevent fraud. Good. Now you see this, that's the same thing. Okay, prevent fraud. Right. Now let's look at it. Some of the internal control policies and practices you're having in the bank. Take for a dormant account. We discussed what is dormant account. Now what is the normal procedure about the dormant account? After certain time period, as per your bank, you need to keep your dormant account unlocked. And all these mandates have to keep separately under the custody of the senior officer. Block the accounts in the system. Now, if a customer comes to activate, so you need what? You need a letter or request in writing. Right? Then only you reset, but you can't do the reset. And you need to get the approval from senior authority. So this is one internal control policy to handle the dormant accounts. Separate the dormant account. Mandates keep it separately under senior officer. Block the accounts in the system. Resetting only customers request, written request with the permissions of senior officer. Now this is this year's question. What is the internal control policy for your handling dormant account? This year's question. That be January, right? Okay, so this is some of the, now some questions, if you are working in the bank, is simple. especially the branch. But some students who are not under body disadvantage, but I am just telling to support that. Dormant accounts. Clear? Now you know how to handle the dormant account. What do you mean by dormant account? Any transactions not taking place, maybe either to 1 to 6 month, 1 to 2 year maximum, depend on the policy of the bank, can be considered as dormant account. So such dormant account, keep it segregate the dormant account from the other sets, and especially the mandate. Why? Otherwise, employees can make use of these mandates if you don't have internal control policy. Right. Then opening and renewal of deposits account. Right. So when you open an account, that is what I earlier told you. Your officer and another party has to look at it. Correct amount was deposited and all. Right? That is why I call 4 whys principle. Creator and the approver. Right? Okay, so not by one person. All the activities is usually taken by more than 2 people. Right? Then credit management. Now issue a grant or loan. Right? So there may be a segregation of duties on the credit department. Not a single person grant loan. Application is taken over by somebody, visit by somebody, check the review, credit worthiness of him, credit limits and approval is by another party, authorization is somebody, risk may look at it. For granting a loan, you have a front office, you have a middle office, and you have a back office. They are separated. Front office, middle office, back office. Right? So segregations of duties. Right. Next one. Internal audit and independent review of the credit files before approvals. Right? Okay, so please read that part. Right? Then you may have a system passwords. Every employee must have a password. So never ever go and leave it your system open. Somebody can log into your system. Right? Usually, so from there only you identify your authorization. Now you say STBT, other transaction, who went into the system? Usually password also control system. It has to be changed. Right. But now even for today, customer's password need to be changed. Right? Using a lot of characters. Right? So password is give some sort of a protection. Right? So these things we call them as the dual control. Meaning signing or approval of 2 authorized officers based on different amounts or involved in financial transaction. Right? So that is what we call the dual control. Right? So a lot of banks activities are subjected to dual control. Now look at it. 2016 paper. The dual control are expected to, what is the answer? Come on. What is the answer? Dual controls are expected to divide jobs, promote compliance, control the work of staff. What is the answer? So I know the students have a problem answering to select either A or B, A or C. Right? So what is the best one out of these two? Prevent irregularities. Right? Remember that. Not promote compliance. Yeah, but it is a dual control, is an internal control mechanism. It's not promote compliance, so it's an internal control. So therefore, it's a prevent irregularities. Right. Internal controls are primarily expected to prevent fraud, right? The same question asked over and over again. Okay, now about the IT system also. So nobody usually getting involved with IT. Right. So I have some more time. Okay, can anybody give me the answer, Steven? We have not done. We have not done HRM. But can anybody give an answer for this? What are the HRM internal control mechanism? Some of this question asks, I'm going to teach you, but with your own experience, can you tell me what are the internal controls? Right? Now we discuss dual control. We discuss system password. Those are operational, right? Operation IT and all. Okay. Now tell me, what are the internal controls you are aware?
Code of conduct.
Right. Okay. But everybody has to fulfill, no? Okay. We'll take. Okay. Right. Adhere to code of conduct. Okay. What else? You may, as a bank employee, you know what are the internal controls as far as the HRM is concerned. Tell me what? Some more. We are going to learn, but what are the internal control you have in your bank as far as the
Transfers.
Oh, right, transfers. Okay. How?
Annually.
Okay.
Annually.
Annual. What annual leave?
7 days.
7 days compulsory annual leave. Good. Very good. What else? Very good. Other one is what? What? Job? What is that? So you are supposed to rotate your job. Rotation. Job rotation. Right? 7-day compulsory annual leave. Right. So these are some of the internal control as per HRM, no? Clear? Right? Husband and wife not put in the same branch, same division, same bank. Same bank. Right. Not same branch, or maybe it's not same division, usually. Right? Okay. So there are some internal control, job rotation, right? Okay. And also job description. Job description. Job description means it's a control mechanism. You are supposed to do this. Right? Okay. So these are some of the internal control system. Right. Since I have 6-7 minutes, shall we try to answer to that question? I gave you a question. The risk faced by bank. So no, risk faced by customer because of some banks transaction with that. Hold on. Can you tell me one? What?
Privacy.
Okay. I'll accept that. Right? Confidentiality risk. Okay, accepted. Okay, right. What else? What else? Now, customer go to the bank, right? And they're going to withdraw the money. Bank said they don't have money. So what is the risk faced by customer? Because of bank's liquidity risk, customer can't take the money, right? So the customer face the credit risk because of banks having a liquidity risk. Right? Customer facing a credit risk because of banks facing a liquidity risk. Got my point? Customer facing a credit risk. ඔහුට ණයක් ගෙවා ගන්න බෑ මොකද බැංකුවේ සල්ලි දෙන්නේ නැති නිසා. Because of this, you want to withdraw, customer banks having problem with the liquidity risk. Suppose again you're facing another credit risk. Problem is now you say example you took a loan, housing loan. You took the first installment, right? You get the first loan amount. Then you go for the second loan obtaining. Bank said, so at the moment we don't have money, so come next day. And again, a problem faced by customers. Or sometimes the employee has taken the money, right? Somebody has taken the money. His deposit, somebody has withdrawn, your employees. What risk? Operational risk. Right? Clear? Right. So sometimes he has gone to withdraw the money, system is not work. All problems because of banks issues, bank risk. He also faces a risk. He faces a liquidity risk because of bank system is not working. Right. Clear? Right? How he faces risk? Because of bank risk. He faces risk. Now say he wants some money. System is not working. Operational risk issue with the bank. As a result of that, customer can't take the money, therefore he's facing a liquidity risk. Right? Okay, now let's look at the other way. Behavior, customer's behavior. Customer not settling loan. Therefore, bank facing what risk? Liquidity risk. But they don't have money. Right? Okay, so customers facing a credit risk also. Sorry, bank face a credit risk because customers default. Because of his having the credit risk, bank also having a liquidity risk. Again, some customers withdraw the money at once. The deposit they is taken once. Then bank facing what risk? Liquidity risk also. As a result of that, other bank also face contingent risk. Right? So therefore, both banks and customers face risk. So how to avoid that risk? What's the best answer? We have discussed. What is the best answer? Avoiding risk by both parties. What you need to develop?
Good relationship.
Good relationship. Right. That's the answer. So you can mitigate both risks from the customer's point of view as well as the bank's point of view if you have a better relationships. Okay. So we just completed the customer protections, right? So we have done in a methodological manner. One is first we discuss what actions taken by regulator as well as the bank to protect customers. Then we discuss today what actions taken by the regulator to protect banks or financial institutions. So they need to maintain certain things. Then we discuss if we want to have a better financial system, especially for payments and other things, what are the laws? Right? And then we discuss what are the laws are there to prevent banks are misused by customers. Anti-money laundering, then terrorist finance. So we have a laws, Financial Transaction Report Act, and what are the information you need to provide to prevent that. KYC, CDD, all we discuss. Right? And also apart from that, we discuss what banks must have, how to prevent the financial fraud. For that, we must have a proper internal control systems. We discuss some example for internal control system. Dormant account handling, dual control, right? Why it is important? What are the repercussions of that? Right? Okay, I think you understood clearly all these things. Right? Okay, so we'll stop now. And next week, we're going to start HR, new area. Right? Now, only one area we need to cover. Right? Thank you. So we will see you on next Sunday. We try to finish most probably during the month of October. Okay.